Okay, repeat. Manufacturing account. You are asked to prepare raw mat, opening, purchase, import, carriage over. Less closing, raw mat, consume marks will be given for this. You have raw mat, you have wages, you have direct. So three direct, direct, direct. You have your prime cost, factory overhead, production overhead, supervisor salary, depreciation, and many, many more. If it's for external publication, we don't show them here individually. We show them as a total. Okay, now individual will be part of the working. Opening, closing, cost of sales, cost of manufacturing. Normally, you're asked to calculate all the way to here, and notes will tell you how much to transfer at wholesale market price, market value lah, wholesale price lah, market value. You are asked to find the missing figure. 30,000 will be transferred to here. Correct? Again, if it's external publication, do we show opening, transfer, closing? Do we show opening, finished goods, transfer, closing? No. We have to show them as part of our working. We only show 27,000. Is it okay? This question, we have factory profit, meaning this 30,000 includes some factory profit and some is unsold, means this closing inventory include the portion of factory profit. Must we take out the unrealized profit? Unrealized profit, yes. How? Open allowance for unrealized, put in opening, question will give, put in factory profit from here, and how to find the closing? Here, take the closing inventory, divide by transfer price times factory profit, meaning out of 30,000 here, include profit. 6,000 is unsold, means how many percent unsold? We take 6 divided by 30, 20% unsold, 20% unrealized. If the 5,005 included is recorded, however, 1 is unrealized, you bring up the balance is realized. What do you do with this realized profit? 5,002 we add to gross profit. Is it okay? Realized profit SPL we add to gross profit. Then what happened to your closing inventory? We have closing raw mat, closing WIP, closing finished goods. And what do you do with this 6,000? You must minus your unrealized profit. Closing raw mat, closing WIP, closing finished goods, less of your unrealized profit. So I'll show you the answer for this question first, explain later. Meaning, for this particular question, you are asked to prepare manufacturing account, calculate all the way to here, and you'll be given the transfer price, note 2. Okay, you are asked to find the missing figure, which is your manufacturing account, manufacturing profit, factory profit. What do you do with this? 1,4, you have to transfer, right? But we know that when you transfer to here, we have to show the opening finished goods plus the transfer and the closing. But we can't show here. So what do? We show it as part of working. Opening, transfer price, closing. So the working will be here. Opening finished goods, transfer price, less closing will be my cost of sales. You don't show it in the P&L, but you show it as part of working. Okay, no? Opening plus transfer price less closing is my cost of sales. Then later we go through step by step, but over here you have your opening, factory profit, closing. What do you do with this 114? Should be add to your gross profit, right? So 114 gross profit we add to here. So we are just applying our concept that we learned previously. Okay, now for manufacturing account, external publication, everything, and we combine in one question here. Okay, so before we look at this question, there are some concepts we need to know on disposal, especially. This example here, important for this tutorial, more important for next two tutorials. Disposal. Okay. I have a machine here, 1000, and it's only one unit, very easy. One and only unit, I buy 1000. Depreciation is 10% per annum. Straight line. So far accumulated is 300. How many years have I purchased? I buy 1000, one unit. Depreciation 10% on cost. 100 per year. I have accumulated 300, so 3 years. What's my net book value? 700. So cost is 1000, one unit. Accumulated 300. Net book value 700. Disposal value scenario 1, I sell it for 73. When I sell, open the disposal. How many steps? 4. Step 1, I sell off one and only asset. Take out from your cost 1. Then focus on this asset. How many years have I depreciated? 3. 300. Is it here? Dispose of. So we take it out. Step 2. In other words, am I transferring net book value over? How much is my net book value? My net book value is 700. Cost less accumulated. Net book value is 700. Step 3, I sell it for how much? 730. Net book value is 7. I sell it 730. Gain or loss? Gain. Doesn't matter. All you have to do is step 1, step 2, step 3. Because you debit bank, you receive money. You credit disposal. Gain or loss? 1030. 1000. So balancing is 30. Step 4 will be your gain. Other income. Okay. What if, same scenario, scenario 2, I sell it for 610. Net book value is 700. Gain or loss? Net book value, I sell below is a loss. How to record? Same. Step 1. From here, transfer to the cost, disposal. Step 2, transfer to disposal. Net book value is 700. Step 3, bank. 610, 910, 1000. Balancing is loss, 90. Okay, no? Now, question. Scenario 1, I make a gain 30. Inflow or outflow? Inflow, outflow, cash. Next tutorial, statement of cash flow. So we need to know our money in or out. So inflow, outflow, in. Scenario 2, I make a loss. Inflow, outflow, cash flow. Inflow, outflow. Inflow. Answer is inflow. Scenario 1, I sell it for how much? 730. I debit bank. Credit disposal, I receive 730. Inflow 730, not 30. Okay. Second scenario, I sell it for 610. I make a loss. Inflow 610, but I make a loss. Meaning, I sell below my net book value, I make a loss, but still receive money. If I sell above, I make a gain. So, conclusion, whenever I dispose of, I will definitely receive money. Okay, not? Is it above or below net book value, then I will have a gain or loss. So, gain doesn't mean inflow 30. Yeah? Loss doesn't mean outflow 90. Both also inflow 730, 610. Important for next tutorial. Statement of cash flow. Okay? This example is only for one unit. But we know company will have many assets. Now, machine cost, originally I bought $400 per unit, and I bought 2. So total cost is 8. Depreciation is 10%. SL means straight line. Means 1 year will be 80. So far, my accumulated is 1/6. How many years have I depreciated? 2 years. So now I'm in the third year. So start with opening 800, opening 1/6. 2 units. Given 2 units. Disposal 1 unit for 300. Disposal, open disposal. How many steps? 4. The first 3 more or less fixed. The other one, last one, is either gain or loss. Step 1, if I dispose 1 unit, transfer the cost of that 1 unit. How much? Cost. I buy 400 per unit. Buy, record cost, you sell, you must take out also the cost. Step 1. Focus on this one. What is my accumulated depreciation for this asset that I am disposing here? 10% is 40. Already 2 years, right? Just now we mentioned 2 years. So 40, 40, 80 is the accumulated inside here. Here we have 2 assets. One of them is 80. So we must take out 80. Step 2. Am I transferring the net book value 320 over? Net book value 32. And I sell it for how much? 3. Debit bank, receive money. Credit my disposal. So I make a loss will be here. 400, 380, balancing is 20. It's a loss. Meaning our net book value 32, I sell at 300, I make a loss. Still an inflow, 300. Okay, now continue. I still got how many more assets? 1 unit. Carry down. Brought down. 400. Must I depreciate? You have the asset, you use it, you must depreciate 10%. So 10% straight line means 10% on cost, 40. Debit, 40 means 10% on this, 40. Debit depreciation, credit accumulated. What is my carry down, brought down? 200 minus 80. So what is my closing net book value? Cost less accumulated. Closing net book 28. Done. Original start with 2, ended with 1. Depreciate and closing. Okay. Now, what if this one settle? Straight line method, 10% on 400, done. What if at the end of the year, I decide to charge depreciation on reducing balance? End of the year, I decide to charge 10% on reducing. So how much is my depreciation? We know depreciation is 10% on net book value. So what is my net book value at the end of the year? Cost. Net book value at the end after I dispose of net book value 1/6 minus 80, I left with 80. So 320, 32. My depreciation will be 32. Just now 40, now 32 because reducing. Okay. What is my cash inflow? Always remember, I sell it for 300. Inflow is 3, even though I make a loss. Next example. I have many assets. total machine cost is 2. Total accumulated 8. Some asset 2000, some were purchased last year, some purchased many years ago. Some already depreciated 5 years, some 4 years, some not sure. So altogether 2,800. Put in here 2 and 8. Depreciation during the year, depreciation charge is 10% straight line. Forget about reducing, straight line first. An asset, one asset, costing 500, purchased about 2 years ago, was sold for 210. There's a disposal for 210. So how many steps? 4. Step 1. How much? Yeah, an asset costing 5, so I take out only 1 unit, 500, step 1. Now focus, what is the accumulated depreciation for this disposed asset? How many years have I depreciated? Or what is the accumulated? 2 years. So 10% will be 50, 50, 100. Already depreciated 100. Is it inside here? Yes, take it out. Already disposed, take it out. Net book value is 400. Transfer 400 over. I sell it for lower, 210. Make a loss again. So not sure, anyway, just plug it here. Bank. Debit bank, receive money, credit disposal, and 500 and 310. 190. Done. Disposal done. During the year, there's a disposal. So end of the year, do I still have remaining asset? $1.5. Must I depreciate? Yes. 10% straight line means 10% on cost. 150. 150. Debit depreciation, credit accumulated. Closing, carry down, brought down. 95 minus 100. 85. What's my net book value? Cost less 85. Done. Okay. Now, what if at the end of the year I decide to depreciate based on reducing balance? So I wrap up first. Disposal still the same. End of the year, I decide to depreciate based on 10% reducing. So depreciation is your percentage times with net book value. Cost is 1.5. Net book value accumulated, it was 8. 1.5 is after disposal. So accumulated must be after disposal, means 700. So 800. Depreciation will be 80. Not 150. Done. Okay. Cash inflow from proceed, money received from disposal, 210 inflow. Next example. I have a machine that costs in total 5, many assets. Accumulated depreciation 16. We start with straight line method, 10%. An asset with a net book value, an asset with a net book value of 12 was sold at a loss, 50. That asset originally cost 400. So 5,000 and 16. Disposal 1 unit of asset with a net book value of 12, and I sell it at a loss. There's a cost, it cost 400 originally. So how? Step 1. 400, take out from your machine. we need to know the accumulated to take out from here. Do we know? Accumulated? Not given, but can we find? How? 400 is my cost. Net book value, 400 is my cost. Net book value, 120. Means this assets accumulated is 280. Okay, not? So, and we know 280 must be taken out from here. The asset disposed of, we must take out the accumulated. So net book value 120. I make a loss. Loss means which side? Step 4, loss. 50. What is missing? Step 3, money received. Okay, no? But from here, before, of course, this is the balancing figure, number 3. Bank. 400, 330, 70 is the balancing figure. But can you get the 70 from here? When my net book value is 12 and I sell it at a loss, means I sell higher or lower than 12. I sell lower by 50. When I sell lower, means I sell 70. Is it okay? 120, I sell 70, I make a loss. So we can actually find from here the 70. Okay, disposal done. End of the year, we must still depreciate. So what is my closing balance? 46. 46. If it's straight line, 10% on cost, 460. Depreciation, 460. Done. Okay, no? But what if it's reducing balance? How much will be my depreciation? If it's 10% reducing balance, will be 10% on net book value. 4,006 minus this one after disposal 46, accumulated after disposal 1320, 16 minus 28. So it will be 3328. 3280, 10%, 328. Depreciation 328. What's my carry down, brought down? 2048, 1648. Brought down 1648. What is my net book value at the end? 4006 minus 1648. Whatever. 4006 minus 1648. Okay. Let's try one last one. I have a cost 2000 in total. Accumulated was 8, 10% reducing. An asset with a net book value of 15, it was sold at a gain. It cost me 500 originally, 2,800. Disposal 4 steps. Step 1. $500. Do we know the accumulated? Yes, 500 cost net book, so 35. I make a gain of 30. So what is my amount received? 5318. Is it 18? Yeah, or you can get it from here. Net book value 15 and I make a gain, means I sell above 15. Okay, I sell 180. Okay, disposal done. Carry down, brought down 15. And we have to depreciate straight reducing balance. 10% on net book. Okay, 1005 closing balance, closing cost, closing accumulated is 8 minus 3545. Closing cost, closing net book, closing cost, closing accumulated times with 10% depreciation. Done. Carry down, brought down. 245. 555. Net book value will be 945. Done. Okay, 15 minus 555. Okay, so tutorial 9. Required. Prepare for honey. External publication in accordance to IAS 1. External publication means we don't show opening, we don't show purchase, closing, we show only the cost of sales. And administrative expenses, distribution, all in one category total. Okay. Now, already identified here, raw mat is for manufacturing accounts, work in progress, manufacturing, finished goods, opening finished goods, SPL. L means SPL. P will be SFP. Okay. Utility, rent, insurance. This one I have to keep. I have to wait because we have a note on this. Manufacturing. P is SFP. L is SPL. Next page. Note 1. At 31st December means closing date. Closing raw mat, closing WIP, closing finished goods. Manufacturing, SPL, closing finished goods. And all raw mat, WIP finished goods must appear in our SFP. What if I got unrealized profit? Must I minus from my here finished goods? Yes. So this question, yes, we have. Note 2. Finished goods are to be transferred from manufacturing account to the SPL at 1462. So we're going to transfer at 1462. 1462. Okay. So this one here, meaning, if you refer to this example here, we are asked to calculate all the way to here, right? And note 2, transfer at 30,000 given. So we are asked to find factory profit. So which one is given? The 30,000 here is given. Meaning note 2 given is the transfer price. So what do you do? Let's start with factory, manufacturing cost, our manufacturing account. Manufacturing account starts with what? Opening raw material. How much? Then purchase of raw mat. Then import duties, carriage inwards. Do I have import duties? No, but I got carriage inwards. So opening, purchase, import duty, carriage inwards, plus, add up, then minus closing raw mat, note 1. Closing raw mat, note 1, settle. What is the term? Cost of raw mat consumed. Cost of raw mat consumed. So after raw material will be our direct labor. So direct wages, how much? Direct wages will be 70% direct worker. The other one is indirect worker. So 70% go to direct wages, 30% go to overhead. Okay. Overhead, manufacturing overhead. We also got here. We also have here factory supervisor, factory overhead. Now, because this is for external, do we show individual expenses? No. You look at the part of the answer, how? You see, you take later. We already done all the way to here. Opening plus purchase, carriage over, no import duty, less closing, cost of raw mat, consumed. Direct, show 70% come here. Where's the other 30%? Overhead. But overhead, we have a working. So your overhead will be here. You can see here our working will be overhead, cost of sales, admin, and distribution. This is our working. So 330, 70% go direct, 30% go to overhead. Done. Show working. Mr. Su, half a mark. Working, 1 mark. No working, half a mark. That's it. Supervisor salary also part of overhead here. Meaning later our total overhead 537. We will put it here 537. Understand? Now, utility, rent, and insurance. Note 5. Utility, rent, and insurance are to be apportioned among manufacturing, distribution, and admin in the proportion of 2:1:1. Manufacturing means overhead 2, distribution 1, admin 1. 2:1:1. So these three expenses need to be apportioned 2:1:1. So show this in your working here. Utility, rent, insurance, 2:1:1, 2:1:1, 2:1:1. Exam 3 marks. 2 to overhead, 1 admin, 1 distribution. Got it? Yes. Continue. Note 3. Note 2 first. 1462. Meaning we are ready, let's say we calculate all the way to here, including opening, including closing raw mat, WIP. Different students may have different answers, correct or not? Correct? Possible. But they say not to transfer at 1462, everyone must put there 1462. Understand? So what do we find from here? We find the manufacturing overhead. You can show here as balancing figure, or you can show 1462 minus 1351 to get this. With the working, you get a mark. Or you write there balancing figure, yes, you get a mark. The answer here, different student, different answer, you still get 4 marks. Okay, so 1462 must be transferred to where? Transfer to P&L, right? But P&L, we cannot show opening, transfer, closing. So what must you do? Can you see we have a working? Opening finished goods, transfer price 1462, closing inventory. So you can see here. Opening finished goods, transfer price 1462, less closing, what do I get? Opening finished goods plus transfer price less closing, I got my cost of sales. So again, show as a working. Okay, opening, transfer, closing. So we'll come back to this later. We continue with note 3. We discussed a few examples just now on disposal because of this note, as well as next tutorial, cash flow. During the year, machinery was disposal. Net book value of the machine is 11. Net book value. The cost is 203. What can you find? You dispose of an asset with a net book value 11 that costs you 203. Meaning we can find the accumulated depreciation. And we need cost, we need accumulated to transfer out, step 1 and 2. So the proceed from the disposal means your disposal price is 93. The asset net book value 11. You sell it for 93. Gain or loss? It's a loss of 17. But we need to record them in the book. Okay? So I do it here. Machinery. Okay, start with opening. In this case, closing, because you see here, sorry, forgot to finish it. No transaction has been recorded for the disposal, including the receipt from the disposal. Means the money that you receive all not recorded yet. So we have machinery 800,000 cost. We have machinery accumulated 42, but haven't adjusted for the disposal. 842, balance brought down 800, balance brought down 42, means net book value 38. Haven't record the disposal, so let's record. Step 1, what's the cost? 203. 203.5. Okay. Step 2. What is our accumulated? Assuming we do not want to find through this way. Assuming this one relevant for next tutorial. Let's say accumulated, we can find it from here, and we just transfer from accumulated to disposal, right? Do I have number 3? Bank. How much? 93. Do I have gain or loss? 110 net book. I sell for 93. I make a loss. Which side? Loss is 17. So missing figure is here. Accumulated depreciation. Sorry. 82.5. 93.5. And disposal, this point number 2 here, step number 2, we know is taken from here. 93.5. Disposal done. Okay. Cash inflow, we know definitely is 93. It's a loss. Where will this appear? Manufacturing account, admin or distribution, machinery. I sell machine is a loss. Charge to where? Manufacturing, admin or distribution. So this one go to manufacturing account. Next one, I need to calculate the depreciation. So depreciation, plant note 4, 25% on reducing balance. What's my carry down product? 6596.5. Cost. Depreciation will be 25%. 596.5 minus how much? What's the balance at the closing? After I dispose of, I took it out. What's my balance? 73 means 326.5. 326.5. This one. So what is my depreciation? $67.5. Manufacturing, admin, or distribution? Machinery. So I got two manufacturing expense overhead. 67 depreciation, 17 losses. Okay. Means here. In my production overhead, here, 17,000 is a loss. Depreciation is 67,500. But you look at the working here, the closing is cost and accumulated net book value 380. And then there's a disposal not recorded. We take out also the net book value 110. So this is the net book value before disposal. We dispose of 110 net book value for 93. Take out the net book value. We times with 25 depreciation. This way faster. Okay, not? Depreciation done. Disposal done. Of course, we got building 2% on cost. This one no issue. Go to admin. Okay. Next. Note 5. Done. Note 6. A review on the receivable. Oh yeah, sorry. Just now the disposal haven't recorded the proceed. No transaction has been recorded, including the money received 93 haven't received. So we must record the money received. Bank account 93. Okay. Debit bank. No 6. A review of trade receivable show that it was necessary to write off bad debt 45. So write off from your trade receivable. Bad debt go to where? Manufacturing, admin, or distribution. Last week explained it. Bad debt go to admin. So admin 45. Take out from your trade receivables, then we have to provide for DAPU debt. So write off first, then DAPU debt. Trade receivable there. Credit trade receivables, write off bad debt. Clean it up. Debit bad debt. Do I have bad debt account now? So this question, I actually have a bad debt account of 55. So I write off another 45. Credit receivable, debit bad debt. Go to admin. Here. Admin expenses. We have a bad debt 55 plus the 45 write off. Put it under admin. Okay. Then we have to make a provision for DAPU debt on the remaining balance. So 8,000, 85,004, write off 45. The remaining balance I'm going to provide 5%. So DAPU debt will be 4045. Do I have opening balance? Opening DAPU debt? No, 0. So from 0 to 4045 increase. Expense. Admin or distribution? Still admin. Here. Admin 4045. Show the amount write off, then provide 5%. Next. Note 7. 7% debenture means 7% loan. I issue the debenture to take a loan on this particular date, 1st April, whereby the interest is payable 1 year in arrears. Today I'll pay in 1 year time, which is March next year. I'll pay March next year. My year end is 31st December. The loan is obtained April. December. The loan is obtained 1st of April. When do I pay this loan? Interest. 1 year in arrears means I pay 1 year later, which is next year. I'll pay 31st March next year. However, I close my accounts here. Have I paid anything? Interest? So what must I do? Accrue or prepay? I need to accrue how many months? 9 months. April to December, haven't paid a single cent. So interest to be accrued, 7% of my loan. How much is my loan? 55. Okay. So 7% of 55 is 1 year interest, but I want to accrue 9 months. 2,888 interest. Haven't paid, need to accrue. Okay. Now, interest appear in my SPL, 288, 9 months, and haven't paid, 288, interest payable, liability. Continue. Note 8. Note 8. The director decided to transfer 1/5 to retained earning, from retained earning to general reserve. So, statement of changes in equity, transfer. Tax paid by check, 24. Was omitted means haven't recorded. You haven't recorded the tax paid. However, the tax should be 28. So let's record the tax paid. Minus 24. Haven't recorded, so we should have a tax account of 24. However, the actual tax is 28.3. So we have to accrue another 4.3. So total tax will be 28.3. Accrual will be 4.3. Okay, so there, record the payment. Accrual will be another 4.3. So if you check from here, your tax 28.3. However, 4.3 haven't paid. Tax payable 4.3. Last one. The director of the company proposed, means haven't paid, final dividend of 9%. Sometimes they give us 3 cents per share, 9%. So this is 9%. It was to be paid after the end. You can cancel out the income tax. Last time relevant, now not relevant. That's why we can actually ignore. 9% of how much? Do we have to know the number of shares? No need, because 9% in percentage we always times with the value. So 1912.2. 9%, 1912.2. So dividend proposed 172. Haven't paid. So this one appear in statement of changes in equity and SFP because haven't paid. Here. Appear in my dividend payable, haven't paid yet, as well as statement of changes. Where do you get your profit? You get from here, your profit for the year, dividend paid, transfer. Okay. Now, last part, again, repeat in case you can't see earlier. We transfer this example here, we transfer 30,000 over. Because there's a closing, some are unrealized. So we have to open allowance for unrealized profit. What do? We put opening balance. Factory profit get from here, 55. And then what we do? We need to know the closing, therefore the unrealized. 6,000 unsold out of the 30,000. So unrealized profit will be closing divided by transfer price. Out of the 30, 6,000 unsold means 20% unsold. 20% unsold, 20% unrealized. Put it here. If 1 is unrealized, means the balance is realized. Put it as part of your income. Okay, so we're going to do this for this question. My closing inventory is 375,700, note 1. The amount transferred is 1462, note 2. So let's calculate. Start off with allowance for unrealized profit. Opening, how much? Check. Yeah. Opening allowance for unrealized profit 32500. Next one. Factory profit. How much is transferred? How much is recognized? Is recorded as factory profit? 110,500. In your exam, whatever the amount, just put this amount. I mean, as per your question answer lah. Okay, now 110,500. So I already recorded 110 profit. However, there are some unsold. How much is unsold? Closing finished goods 375. Closing inventory, transfer price, factory profit. 375,700 closing divide by transfer price. Transfer price is 1462. Times with 110,500. So 28391 is the unrealized profit. Put it here. This one will be carried forward to next year. Unrealized. So how much is realized? Never mind, I'll give you here. 114,609. Where will this 114 go to? Other income. After gross profit. Now, this question, you have one other income, do not know what is it? Yeah, interest income, other income. And we got one 15.3, and we have one more here, 114. So answer, the interest income plus the 114. Put it in other income at your gross profit. Okay, now closing inventory. In my SFP closing, I got how many tags? 3 tags here. Closing raw mat, closing WIP, and closing finished goods. But what must I do with this closing finished goods? I remember to minus your 28391 here. Closing inventory will be raw mat plus WIP plus finished goods less up your unrealized profit. Okay. One more last one. Just now we forgot to put in this also. Your tax paid is omitted. Means we haven't recorded the payment. Bank. Oh yeah, recorded minus 24. Okay. So answer. Next. Statement of charges, capital plus reserve is total equity. Next,